Hey guys, welcome back to the channel. In this video, I'll be taking a look at some of the most popular communication stocks out there. Verizon, ticker symbol VZ, and AT&T, ticker symbol T. I'll be comparing their businesses, taking a look at some of the financial metrics for these stocks, and at the end of the video, I'll be wrapping up my thoughts by saying which company looks like a better investment right now for me, and if this changes my investment strategy at all. So make sure you stick around to the end of the video to see that. Let's start off by defining what these companies do, because although their key business models are similar, there are some significant differences that we should be aware of. Since I've already done a full video on AT&T in the past, I'll start off with Verizon. So Verizon is what I would classify as a pure network and communications company. They derive the majority of their revenues by providing network and services and wireless telephone connectivity services to individual customers. In 2019, about 69% of their business was to these individual customers, with 24% coming from the same services but to businesses. And then the remaining 7% of the revenue comes from other services, including their media business, investments, and other services. Now, when we compare this to AT&T's business, the main difference is the amount of focus put on the wireless and network services. While both of these companies are rightly classified as telecom companies, AT&T has shifted some of their focus to their other business segments as well. When you combine Verizon's business and communications revenues, they make up about 93% of their total revenue. However, only 54% of AT&T's 2019 revenues came from their wireless and wireline businesses. The rest of the revenues come from other business ventures, like Warner Media, who accounted for 20% of their revenues in 2019 by providing services like television programming, pay-per-view products, and film production, in addition to their fairly recent introduction of HBO Max. So right off the bat, there's a clear distinction between these companies, because if you absolutely hate the additional products provided by AT&T, then Verizon's a clear choice. But if the opposite is true, and you're more skeptical of the telecommunications industry long term, and value the additional diversification, then AT&T will be your frontrunner. However, I think that all the business services for both companies are promising, so in order to put one ahead of the other, we'll need to do a little more digging. Over the past 5 years, although both Verizon and AT&T have been growing slowly, their market share has been steadily decreasing. On the screen now, you can see the top 4 players in the United States market. And although it isn't a huge drop, the market is deconsolidating a little bit, which means the power of the largest companies in the market is shrinking a little bit. If we take a look at AT&T and Verizon individually, the trend becomes a little clearer. Both companies are losing market share, but Verizon is holding a little stronger, which in my opinion is due to their sole concentration on this market, while AT&T is a little more willing to give up share because of all the other products that they have. This doesn't necessarily mean that AT&T is failing in the market, but if you really want to invest in a dominant telecom company, then you may be more inclined to invest in Verizon, as they're putting all of their chips in that basket currently, while AT&T is focusing some of their efforts elsewhere. It'd be irresponsible to not mention the transition to 5G while talking about any telecommunications company. Moving into the next generation of wireless technology, I think that AT&T and Verizon have done a very good job, and of all the wireless service providers out there, they are the best positioned to control a large part of the market. Both companies have invested into building out their 5G infrastructure, and although they have slightly different approaches, they're consistent with their overall business strategy when it comes to wireless services. AT&T is offering a middle tier to their speeds while Verizon is not, which in my mind shows that AT&T is content with having a large, stable market share, while Verizon is looking to regain the market share that they've lost in the last couple of years. Again, this shows that if you're looking for a strict wireless service provider, an investment in Verizon is more attractive, while AT&T is a play on their other business segments as well. However, when you look at the services offered by both companies outside of the wireless services, the case for AT&T becomes much stronger. In 2018, AT&T made one of the largest acquisitions of all time, when they bought the assets of Time Warner, which included HBO, CNN, Cartoon Network, and Warner Brothers Studios. The brands that this acquisition allowed AT&T to control are pretty strong, and it's allowed them to springboard into the increasingly competitive streaming services industry. Although I don't think AT&T will ever be the most dominant streaming services provider, I think moving forward, they have a very good opportunity to be the third largest player behind Netflix and Disney. Although Netflix has proven capable of pumping out an obscene amount of content, and Disney has nearly 100 years of content available, brands like HBO have proven themselves capable of producing extremely high-quality content. For example, HBO's Game of Thrones was one of the most watched TV shows for a few years. And even though it was behind a pretty large paywall, and a lot of people that I know personally only paid for HBO's service to watch that one show a week. If HBO can produce a show like that every couple of years, they'll have a very large base of subscribers, even if they can't compete with Netflix or Disney on the total amount of content. For Verizon, the opportunity outside of wireless communications is not nearly as promising. Verizon Media owns many assets that used to be incredibly strong, but now are shadows of their former selves. They own Yahoo, which used to be valued at over $100 billion, and just a couple years ago, they bought it for less than $5 billion. The same can be said for AOL, who used to be worth more than $200 billion, and still, a couple years ago, Verizon bought them for under $5 billion. I'm not exactly sure why Verizon's decided to make these acquisitions, because even at that point, they'd been beaten down for 15 years straight, and they haven't really done much with them since. But this does present potential investors with a clear distinction between AT&T and Verizon, as the investments made outside of wireless communication for AT&T are poised for future growth, while those made by Verizon are almost all washed up, faltering businesses. Another thing to look at when analyzing businesses is their current financial position, usually seen through their current ratio and total debt to equity. Although both of these companies carry substantial debt, it's pretty commonplace in the telecom industry, as the industry requires significant capital expenditures and investments in infrastructure to remain competitive. However, even with the large acquisitions, AT&T boasts a lower debt-to-equity ratio at 101% than Verizon at 211%. Now, this doesn't mean Verizon's going to have a harder time paying off this debt, because the ratio really shows that Verizon's equity is slimmer than AT&T's, because even though the ratio looks better, AT&T has more debt than Verizon. I think the better ratio to show the current financial positions of these companies is the current ratio, with AT&T at 0.81 and Verizon at 0.96. In the grand scheme of things, neither of these ratios are great, as I previously mentioned that this industry relies heavily on debt to finance their operations. But neither are absolutely horrible either, and it accurately shows that AT&T's relative debt is a little higher than Verizon's. So in general, with the additional acquisitions, AT&T has become a little riskier than Verizon with the additional debt. But they've also been paying down the debt very nicely over the past couple years, so I'm not personally too concerned about it. In terms of dividends, there's also a pretty significant difference between these companies. AT&T currently has a dividend yield of about 7%, and Verizon has a current yield of just above 4%. But given that the overall stock market is somewhere around 2, both companies offer very generous dividend yields. Although AT&T's dividend is much higher, it's also perceived as riskier than Verizon's because their payout ratios are 125 and 53% respectively. Although a payout ratio of above 100% is usually a very bad sign for a company's dividend, AT&T is not nearly as risky as their payout dividend makes them look. Dividends are not really paid out in a company's net income, but rather they're paid out with a company's free cash flow. In 2019, AT&T paid out almost $15 billion in dividends, but they also produced $29 billion in free cash flow, bringing their dividend to total free cash flow dividend payment to just about 51%, while Verizon's was about 59%. So although their traditional payout ratios are miles apart, their true dividend to free cash flow payout ratios are very similar. And as a possible investor in these companies, I think that the dividends of both of these companies are very similar in terms of long-term sustainability. Both of these companies have redeeming characteristics for potential investors, especially those looking for substantial dividend payments, and picking between these companies can come largely down to the priorities and the portfolio that the investor has. For investors that want a pure wireless services company with limited focuses on other services and a more conservative debt load, Verizon is a pretty attractive option. However, options who like companies that are a little more diversified, utilize debt to enhance operations, and pay out very substantial dividends, AT&T is probably the better option. In general, I personally like AT&T better as a company because of the diversification and substantially higher dividend payments. I think that if this pandemic has shown us anything, it's that if a company relies solely on one business to drive revenues, it's possible for an unexpected event to throw the entire company into a lot of trouble. For example, think of Disney, another one of my holdings. Even though many of their business segments were hurt, including the parks and movie production businesses, because they had their streaming business, they were able to turn this bad situation into a bright spot for their company. In my portfolio, I already have AT&T, and that won't be changing for the foreseeable future. And at this point, I don't think I'll be investing in Verizon, even though I think they might be a good investment, because I think AT&T is just a little better for the goals of this portfolio. If you guys enjoyed the video, please make sure to hit the thumbs up and subscribe for more similar content. Only 16% of the people who watch my videos are subscribed to the channel, and since you guys stuck around to the end of the video, I'm hoping you can bump up that number a little bit. As always guys, make sure to do your own research into these companies before making any decision, and I will see you guys in the next video.